Have you ever wondered how millionaires in the UK actually manage their money? I'm not talking about private jets or Lambos. I mean how they think about spending, saving and investing before they get rich. Because here's the thing. The rich don't just earn more, they think differently about money. And you don't need to earn six figures to use their strategy. Today I'm going to show you a simple rule, the 75-10-15 rule, that lets you manage your money like the top 1%, even if you're in an average income. Chapter 1, the 75-10-15 rule, a simple formula to control your money. Before we start, I just want to tell you why I'm so passionate about this channel. Well, it's because I was never taught about investing or personal finance at school. None of us were. And I've had to learn the hard way over the last 24 years how to invest. I've literally spent years making mistake after mistake and being far too anxious about money. And I know that's the same for the vast majority. But things have massively improved for me since 2019. And it's mainly because of a change in mindset and financial education. If you take the time to become financially literate, it leads to financial freedom. Anyway, here's how the 75-10-15 rule works. For every pound you earn, spend no more than 75 pence. Save 10 pence for emergencies, invest 15 pence for your future. That's it. No complicated spreadsheets, no financial jargon, just structure. And structure is what separates broke people from financially free people. Let's be clear, the 1% aren't budgeting obsessively. They're using automated systems to control where their money actually goes before they can spend it emotionally. This rule gives you clarity. It stops the "where did all my money go" feeling at the end of the month. It puts you in charge. Just to be transparent, I used to say, where does our money go all the time prior to 2019. Let me know below, do you have good personal finances or do you need to do a bit more planning each month? Chapter 2, the 75% rule. Spend like you mean it. This is the money you live on. Mortgage, rent, bills, food, petrol, Netflix, Nando's, it's all in here. But the magic isn't in the limit, it's in the mindset shift. Spending 75% forces you to make trade-offs. Do you really need the latest iPhone on finance, takeaways? Do you need a new car? Or can you continue with the one you've already paid off? Now I'm practicing what I preach, by the way. My VW Passat was paid off 2 years ago and it's still going strong. I have no intention of getting a new car anytime soon. Wealthy people spend on value, not vanity. The real rich, the quiet rich, got that way by spending consciously. If you're spending over 75% of your income, that's okay to start, tweak it, aim to bring it down month by month. The goal isn't to punish yourself, it's to create a buffer because what you don't spend gives you freedom. As always, this video doesn't contain any financial advice and the full disclaimer can be found below in the description. Chapter 3, the 10% rule. Build a cushion before you build wealth. Before you invest a penny, you need a financial cushion, a cash buffer. Money set aside purely for emergencies, not for holidays, not for a new wardrobe, only for when life punches you in the face. Think when your car breaks down in the middle of nowhere, your flat gets flooded or your house gets flooded, insurance drags its heels, you lose your job and bills are still due. Most Brits don't have this safety net. According to the Money and Pension Service, nearly 1 in 4 adults in the UK have less than £100 in savings. That's why this rule exists. 10% of your income every month into your cushion fund. Imagine having the recommended 3 to 6 months of living expenses in a savings account. That's serious peace of mind. Here's how to figure out your number. Add up your basic monthly costs. Rent, utilities, groceries, insurance. Multiply that by 3 and you've got a 3 months cash buffer. If you want more, you could multiply it by 6. That's your cushion goal. If your monthly essentials are 2,000, you want 6,000 saved as a minimum. Here's a little tip. Keep this money in a high interest savings account like Chase UK, CHIP or even premium bonds. Don't touch it, don't look at it, just build it. Chapter 4, the 15% rule, where wealth actually comes from. Once your cushion fund is set, it's time to grow your money. The 1% don't get wealthy from their income, they build wealth through assets, investments that work for them, even while they sleep. The 15% rule means you invest 15% of your income every month. without fail. Let's say you make £2,000 a month, that's £300 into investments every single month. But where should I invest? There are two key accounts you must know if you live here in the UK. Account 1, the Stocks and Shares ISA. This is a game changer. No capital gains tax, no dividends tax, up to £20,000 per year, tax free. Withdraw at any time. Use providers like Vanguard, AJ Bell, Free Trade or Trading 212. Pick a low-cost index fund like the FTSE Global All Cap or the S&P 500 and automate your monthly investments. If you want more options to consider, see below for a recent video. Account 2, your workplace pension. This one tends to be underrated. Employer match equals free money. Tax relief equals bigger contributions from the government. Long-term growth, future freedom. Let's say you earn 30,000 and your employer matches 5%. If you put in 1,500, they also put in 1,500. That's a 100% return before you invest a single penny. Don't leave it on the table. Max the match. If you have a limited company, you can invest into a SIP, which is what I do. Chapter 5, the long game. What happens if you stick to this plan? Let's run the numbers. If you invest £300 a month from age 25 to 55 in a simple index fund earning 8%, you'll have over £400,000. If you increase that as your income rises, maybe £500 a month or more, you're talking maybe 800,000, even a million. That's not theory, that's maths. And that's without winning the lottery, buying crypto or selling the company. It's just consistent investing every month, using the same simple rule the 1% have followed for decades. Chapter 6, why most people never do it. So why don't more people follow this rule? Because it's too simple, because it's not flashy, because it takes time. Most people want fast money, lottery wins, crypto moonshots, TikTok side hustles that promise 10k per month by next Tuesday, but the 1% know. Real wealth is built slowly. They plant seeds today so they don't have to hustle forever. This, by the way, was me prior to 2019. I chased quick, easy money and had very little financial education. Not the way to go, trust me. Look at what happened to me in 2011. I lost our life savings gambling on individual stocks. Final thoughts. The best time to start was yesterday. The second best is now. I started using this rule properly in my mid-30s, and I wish I'd known it sooner. But it's never too late. Whether you're 25, 35 or even 55, this rule works because it puts you in control. Control over your spending, control over your savings, control over your future. So here's your action plan. Look at last month's income. Divide it using the 75-10-15 rule. 2. Open a high interest savings account for your cushion. Start investing through an ISA or pension and automate it so your system works even when your willpower doesn't. You don't need to be perfect, you just need to begin, to start. Out of interest, are you a saver or an investor? Let me know below. Summary. Comment below what part of the 75-10-15 rule is hardest for you now. Spending, saving or investing. Now you can watch some more of my videos on this channel for more info on how to manage your money, or you can join my free investing community over on School. See the description for the link. You're getting a one-to-one strategy call, investing courses, investing cheat sheets and much more. Now if you got some value from this little video, I'm going to ask a little favour. Obviously a like or a comment would go a long way, but what would really help is if you could send this video to someone you know who could really benefit from this info. Maybe someone who's just started investing. Anyway, thanks for watching.